He's a graduate of Bachelor of Commerce from Nairobi University, married to one wife and has 3 kids. Javier Franklin, the participants here today are members of a class from Africa's Pocket who did a course called Investable. And the course basically taught them of investment options available in Kenya and around the world. And they want, what they are seeking to get from this session is possible investment opportunities in the real estate sector. And so that's what we will be hoping to hear this evening. So take it away, Karibu.
Thank you so much, Siko. And good to see all of us. I hope I'm audible.
Please increase your volume. I don't think it's very audible.
Okay. Okay, is it better now?
Yes.
Okay, thank you. So thank you so much, Asiko, for the kind introduction. I'm sorry, it looks like I'm a bit in the dark. My lighting is not the best. Thank you all for just giving me the opportunity to share with you. I think Asiko made me aware that you did a course with Rina Hicks, if I'm not wrong.
Yes.
Yeah. You know, she took us through a couple of sessions herself some years back, and which were very helpful, and I hope that you've all benefited. So without spending too much time, I am part of a company called Reva, which is in the real estate space. And you know, we are currently doing a development called the Aviv. The basic idea behind this development is, you know, we looked at the housing space in our country, Kenya, and for a long time it was impossible for a young person to afford a house. I remember a few years back, I thought I was earning some good money. My salary was probably maybe 100,000 plus. And I thought that you know, I would afford a mortgage. So I approached my bank. So let me just welcome my colleague Hannah Washira, has also joined us. She's part of Reva. She's our marketing director. Karibu, Hannah. Maybe before I continue, Asiko, is it okay for Hannah to say hi?
Sure.
Hey, but I'll not put my video on. Good evening. How are you? Thank you for inviting me, and glad to meet this team. My name is Hannah Washira. I work with Javier on the Aviv project.
Okay.
You're welcome.
Yeah, so I approached my bank with my payslip. You know, they say in Kenya, you know, if you're earning more than 100,000, you are in the top, I think, 5% earners. So I thought, you know, with that payslip, I'll be able to get something, only to go to the bank and get rejected because, first of all, houses were probably in the tune of, you know, I don't know, 5 million, 6 million, 7 million. In Kenya, we have what we call the third rule of your salary. You know, the employer needs to give you with something. So just, you know, looking at how much I could afford to pay per month, you know, my salary was still not enough. And it occurred that if you were to afford a mortgage in Kenya, you know, if you're earning anything less than, you know, 400, 500,000, it was almost impossible at the time. And people who seem to have mortgages are just, you know, people probably who work in the bank or maybe the government because they have some good interest rates. So because of that, you know, there was definitely a need to do what we call affordable housing. And affordable housing is, you know, probably something in the range of what, 1 million, 1.5, 2 million. So at that rate, any young professional who's earning, you know, 60,000, 70,000, 100,000, then you begin to afford something in that region. So that became our drive to get into this space of just developing affordable housing, especially targeting young professionals, young families. And you have an option. If you buy an affordable house, you can either stay in it or you can rent it out to generate some passive income. And I'm sure when you're doing your course with Rina, passive income was a big agenda. So I'll take you through what we have as a product. We are not the only people in this space, and I'm sure some of you probably have already interacted with the affordable housing space. I'll just quickly take you through what we are offering. Then we'll take in some questions. I already had some questions that were sent in advance. We'll come through those questions and then take in any other questions that may come up. I don't know, Asiko, am I able to share my screen if possible?
Are you able to?
Not yet.
Asiko, you can give him the co-host rights and he should be able to share.
Okay. Okay, done.
Okay, thank you so much. Okay, so yeah, so on the screen is basically what's already on our website. Some of you, I'm sure you've already interacted with it, but for the benefit of those who probably haven't interacted with it, we just skim through. So we are calling our investment the Aviv, and we are trying to create a product that is unique, that for those of us who have lived in Kino and maybe Kahawa, that some of those houses, the landlord will stay in that. For us, we are trying to create a house that even you as a buyer or as an investor, you can stay in your own house, not just a house that you can rent out. So we'll try and put, we're trying to put some amenities that, are attractive and are different from what others are offering. So some of our features, are of course, good parking, a rooftop terrace, we'll have a borehole, we have internet, security, a laundry room within the house, which is usually not there in small units. The target is basically we are doing 70 units, 55 will be 1 bedroom and 15 will be studios. We have sold out all our studios, but at the time we were starting the project, the studios were going for, at the time it was 1.5, then, for the people who bought fast had a fast buy advantage, and then they went up to 1.7 million. That's how our studio, in terms of the 3D designs, that's how our studio would more or less look like. It's 260 square feet, and the building will basically go to 5 levels. Then we have a few units of 1 bedroom remaining. So, hopefully at the end of this presentation, maybe some of you might be interested. There are a few 1 bedroom units remaining. The current buying price is 3 million shillings. Expected rent will be about 23,000 per month. That's a gross rent. Expected annual yield 9%. The size of the unit is 462 square feet, and there are 55 of the 1 bedroom units. That's kind of how the overall floor plan looks like. So if we just focus on, let's say, just the 1 bedroom, I'm trying to zoom in here, you'll see when you get in from this door, you'll have a kitchen on your left, you have a utility room on your right, a bathroom, a bedroom, a living room, and a small balcony. So, before I even go to the payment plan, why they are Aviv and not any other? First of all, the location we have is very prime. For those who have been probably along the either Lower Kabete Road or Memuto Road or Peponi Road, just after Kitusuru Shopping Center, maybe about just a kilometer, which is like 5 minutes drive. That's where the project is. It's right on the road. So the location is really good. It's very attractive. That place is not as populated. It still has the a very green vibe. It has the Oshago vibe, but also a growing town vibe. Then I mentioned we are trying to give the best quality as much as possible. We'll offer management for the property. So if you buy the property, especially if like for rent, we'll do the management for you, and then the returns are attractive. So if you are to buy, we focus on the 1 bedroom. It's 3 million, but you don't buy it at once. Because the project is, as we speak now, it's off plan. So we are in the construction phase. So what you basically just need to do is pay 30% as a booking fee. And then the balance you pay in 15 months, which is the duration of the project. So if you're to go for the 1 bedroom, that will be 140,000 per month, which personally I find interesting because, if you wanted to buy, let's say, a house right now, you probably have to go to a bank, to get the 3 million shillings and to pay upfront. And you'll have to incur interest on that money. But in this case, if you have disposable income that will afford you 140,000, then you don't need to go to any bank. So you not only get a good deal in terms of the purchase price, but you get a good deal in terms of saving interest payments, because it's like the company or the Aviv is giving you an interest-free, loan by allowing you to pay slowly as the project continues. We began the project in May. So, those are some of the pictures there of where we are. We are on the first floor. So that's how it looks. This is probably pictures taken about 2 weeks ago. So you can be sure, right now there's been some progress, but that's where we are at. This kind of gives you an overview of how a studio would look like. But since it's still under construction, they may not give you a true picture of the final product. But at least it's just to show you this is not hot. We are not selling hot air. Neither is it a wild goose chase. So that's where it is. The road is called Geta Huru Road, and the area is called Kibichiko. Yeah, so pretty much that's the project. Probably I can share. I know there were some questions that came through, so maybe I can go through some of these questions, and then once I've answered the questions, then I can take in more questions from the audience. Asiko, confirm, what can you see on your screen?
I can see the picture, the first picture you had, the Aviv picture.
Okay, thank you.
Yeah.
Okay, great. Okay, so some of the FAQs that came through. So one is a question of our track record. So let me share a bit of our story, and maybe it will I don't know, inspire maybe some of you who are in investment groups. I know, some of us are in chamas and investment groups, and personally, I was one of those guys who are in chamas that start off so well, but along the way, something happens. Someone, fails to pay the monthly fee, or the treasurer runs away with the money and puts it in a pyramid scheme, and many chamas have failed. When we started this, and I think Asiko mentioned I was a founder member with our chairman. We were also from a chama that was not, working really well. We had some money, we had some investments which we are still pursuing till now, but there was no traction. And so we thought, why not, try something different. At the time, our desire was to put up houses for our own sake. I mean, for our own families. And you know, in Nairobi, that's a tall order, especially to get a perfect balance between building a house that is near your workplace, vis-a-vis near where your children go to school, vis-a-vis a location that you like. You know, it's a tough balance. Unless you have money, a lot of it, you know, it's very hard to achieve. So we figured maybe what we do is, you know, get a group of friends together and, you know, identify a piece of land and put up our homes. And so, you know, at the time we just thought, let's start like as 5 friends. We wanted just to raise what, let's say 500,000 and identify a piece of land. And so we started the journey. But as we were in that initial phase, the idea started morphing. You know, we started getting more people interested. And then we thought, why don't we push our faith? Why don't we push the number a bit up? So we pushed the number all the way to, you know, 2 million per investor. And the target was to raise 40 million shillings. It was a lot of money at the time. I mean, this is, let's say, back in 2014. I mean, most of us had to take loans, you know, to you know, get into the project. You know, it was not money that was lying around. But on the other hand, you know, it's very hard to put 2 million in a project or in a chama and not attend a chama meeting, because that's a lot of money. For my family, that was probably the biggest investment we had ever done. So, you know, putting the 2 million and suddenly we're like, okay, we have 2 million, what do we do? So we identified a piece of land just after Kitusuru that was going for 22 million. So, you know, we've gotten 20 guys, people are putting, you know, 2 million. So we have 40, we get that land for 22 million. But we are stuck. We have land for 22 million. If we wanted to develop the land, if we were going to develop the land, it probably would have cost us another, you know, I don't know, 50 million because of just the location of that land. So, and none of us, you know, had the room to go back to get a loan from a bank. So, you know what, so we were stuck. I mean, for 2-3 years, we have land. We have a land, you know, bought for 22 million. We have a balance of about 18. We went and bought more land, you know, somewhere on Red Hill. And now we only have like maybe 3 million in the bank, but there's nothing we can do. And that's the thing about land. You know, you have land that is worth so much, but you are stuck. Our dream of putting our own homes thrown to the roof, we just can't move. We don't have cash flow, so we can't go to the bank. And then we were very attached to that piece of land. So at some point we thought, okay, how do we move on? And fast forward, you know, someone said, why are we too attached to this land? You know, what if we sold the Kitusuru land? So by the time we sold the Kitusuru land, the land had appreciated to about 45 million, between 45 and 50 million. And so we put the land out in the market. And lo and behold, we got a buyer. And you know, within, let's say, 3 years, basically our investment moved from 22 million to, you know, 50 million. Now we had some money in the bank to do some developments. And now, you know, we began this journey of real estate. So and basically our journey at the time was really just, you know, trying to buy land and sell land, which is what we did. But what we did with that money is we did our first project, which is some rental property, which has 38 units along Lower Kabete Road. At least now it's giving us cash flows, but then it also opened our eyes into just the whole real estate space. But then we realize, apart from just having, you know, a project, one of the things that we have internally is capacity, because of the 20 shareholders, you know, all of us are professionals in one field or the other. There are some who are marketers, there are some who are in finance, we have architects, we have engineers. So we have such a wealth of experience that we thought, you know, it's one thing to have money, but how do we leverage on the professions that we have? You know, most of us were making money for our companies, but we're not making money for ourselves. So when someone asks, what's Reva's track record? That's a story I share. But our biggest, you know, sell or our biggest advantage is this is a team of young people like those who are in this meeting. who are professionals in their area, but now using our gift, using our skill, to build something for people like you and I. And just share, the story of one, not the story, like the profile of our chairman, for instance. Our chairman is a gentleman called Anthony Camberera, founding member. He's currently the group CFO of Africa Logistics Properties. For those who know it, before that, he was the finance director and CEO at Garden City. I think for those who've heard about Mivida Homes, he was the CFO there. So, and I could go on and give profiles of the other guys, but every person in Reva is actually a professional, and that should give an investor the confidence that we're not dealing with quacks or people who don't know what they are doing. We have the right experience to undertake the kind of projects that we are taking. Someone asks, whether we have licenses. Yes, we do. Obviously, in construction, you can't start such a massive project if you don't have a license. So we have what we call a special projects company that's doing it, and we have all the licenses, name, approvals, to do the project. Maybe to a question that is probably interests most of us. Someone asked, what is the expected return? So I'll just do some quick numbers, and I'm going to take an assumption that because you have gone through the investment class, the numbers would make sense. And I'll just focus on the one bedroom. So we expect to that a property owner will make 23,000 shillings in the as rent. Then we will charge a service cost of 2,500. So the net rent will be 20,500. In a year, that will be 246,000. If you divide that by your investment of 3 million, your return will be 8.2%. Now, someone would ask, how long will it take me to recover my money? Basically, to take you about 12 years, to recover your initial investment, which is reasonable in the investment, in the real estate space. But one of the biggest sells of, someone would ask, okay, why not put the 3 million in a money market fund? They are giving me 8%, 9%. It's because in real estate, you get something called capital appreciation. And, based on the last sort of HAS report that was done this year, in Kenya, real estate appreciates at the rate of about 10% per annum. So basically in 12 years, your one bedroom unit will be valued at about 7.7 million. And that's very conservative. That's not taking into account that the location we're in is probably not, is very prime. So that we've taken a very conservative figure here. But the other way to look at it is, say, you don't really need the 20,500, this is some extra cash. You can still choose to put that 20,500 you're making in a money market fund at 8% for the same duration of 12 years. And we know the power of compound interest. Your money will basically grow to 4.9 million. Which means in 12 years, you have the 7.7 million appreciation of your house. If you decide to sell your house, you make some 7.7 million. You'll have another 4.9 million that you get from money market. So your investment of 3 million in 12 years would have grown to 12.6 million. When I was a bit younger, when I used to hear I need to wait 12 years for my investment to grow, I thought that was a long time. Until I got kids and I realized that, 12 years for my firstborn would mean that's a time he's probably in university. So I'll actually need that money in case he has the ambition of going to study in the US. So it's not actually a long time to wait if you think in terms of certain milestones in life. Someone else asked about whether we'll manage property. Yes, we will do the property management, so you don't have to worry about managing the property. For those who have studios, there'll be a service charge of just 1,500. For those who want the one bedrooms, there'll be a service charge of just 2,500. Very reasonable, because this is a value add we are giving to those who invest with us. Someone asked whether we have current and future projects. Yes, we do. We have a piece of land in Red Hill, so we are thinking of developing that, but we are watching what the future holds for that area. but also we will continue replicating this project over and over because the demand for housing is still, affordable housing is still very live in our space. And then the question that usually comes out is about, what are some of, the terms, the small terms and conditions, and just to be, very forthright. I mean, of course, when you buy the property, what will happen is, you get a sale agreement and it will have all the fine print, but I just picked, some of those that are very usually interesting. So for instance, if let's say, because there are two processes, so let's say you want to buy the property, you get what you call a letter of offer. Then if you sign it off and then you walk away, there's a small penalty of 50,000 shillings. And then again, the other fine print is if, let's say, you fail to pay your monthly obligations, there's an interest of 2% plus the NCBA base rate, which is our bank, but you won't be charged that immediately. Usually there will be some notices that will be given, you'll be asked, you'll be reminded, by the time we're getting to charging you anything, there will be some communication. If there's a breach of agreement on the part of the purchaser, then there's a 10% that we'll get from your purchase price. And then if there's a breach agreement by us as a vendor, in the unlikely event, then we get to refund you all your monies. Yeah, that ends my presentation. I open up for questions.
Jeffrey, I noticed that chairman is around. I think.
Yeah, great.
For a few minutes, maybe you could just give him a minute before he was going for another meeting. I ambushed him.
Sure. Yeah, Mr. Anthony, Karibu. You can say hi to this group of investors.
Hey, hello everyone. Very nice to meet you. And Karibu to the Aviv. I think it's an interesting project, and we are young, ambitious people who are thinking of, really growing the brand, and we think there's lots of value, even given what you'll find in the market. I think we do have a superior product, a very unique value proposition, and yeah, and the other thing is that we stick to our word. I think one of the things that Javi has not mentioned is quite a bit of the units are actually being taken up by the members in our group, and also are being retained by Reva ourselves. So we do have an interest in the long-term sort of perspective in that. Yeah, so and actually our main motivation is to create passive income that sort of flows to ourselves and even to the next generation. But thank you very much. Yeah, open to any question. I need to dash out in a minute or so. Yeah.
Okay. Thank you, Anthony. I think there's some questions in the group. So before you dash out, I can give you an opportunity. So someone has asked, if I bought outright cash buy, is there a discount?
So how we model the project is, if you were to give me cash on day one, I wouldn't give you any meaningful, significant discount. Because if you look at our pricing and how we've modeled the project, for a lot of the units, actually, because we are now about almost 80% sold. For a lot of our units, everyone is paying during construction. So your money, I'll use it towards construction, and the rationale is let's cut off the bank instead of me going to the bank and financing that project and adding that interest to you, or you going to the bank and getting money and you're sort of being charged interest into the project. Let's cut off the bank. You pay as we go, as we build. Then you're able to get most value out of that, because significant discount to pay me upfront. Whether we'll manage, yes, we'll manage the property ourselves. If you want to manage the property yourself, that's fine. You can do it, but we offer it as a free service. We don't charge for this because the service charge that Javi was talking about of 2.5 is to pay your watchman, is to pay your security, it's to pay your is to cater for common cost, cleaning, those kind of things. So we don't make any money from that or from that service charge. So actually our value add is that we'll get a tenant for you, manage the tenant for you. In case there are any repairs, we'll sort of coordinate all that and ensure that, you know, that investment for you is as passive as needs to be, so that you're not worried, you know, sitting and wondering, where am I getting a tenant from? And actually, one of the things we want to test in this project is what we call a shared rental structure, whereby we are finding a lot of people having a lot of appetite on it, whereby, you know, you actually own your unit, but you can get into a sort of rental sharing agreement whereby if I'm 98% leased, you get 98% of, you know, the rent on your unit. And this protects you against the downside, yeah? You know, in case your unit at one point in time doesn't have a tenant. And we find a lot of people investing into the project, being quite happy with that because it eases your thought in terms of protecting against the downside. In terms of our first project, the occupancy rate, it's 100%. Yeah, I think, you know, we'll go for, you know, 10, 11 months in a year at 100%. We might have 1 month where we have one tenant who doesn't have, but largely that's where we are at. Yes. In terms of tax obligation and rental income, tax is very individualized, yeah? So, you know, because with any income, tax is payable by the person who's earning that income. So from us, we'll just be collecting the income and giving it to you. Then the obligation then literally just falls on you because you're the one getting income. In terms of and possibly this is the last question, possibly I'll answer in terms of security, in terms of completion. So two things, you're paying as you're building, especially when you're coming in today, we've already started building. So as you pay as we build, you have a lot of confidence that actually we are actually building in that case. And the other thing is that we are not only building for you, we are building for ourselves. We are building for ourselves and we are absorbing quite a bit of the cost, like, you know, what is factored in terms of inflation, yeah? Because we want to, this being our first project where we're actually selling to third parties, then we want to ensure we have a very good track record. And the fact that it's not one person who's building this, it's, you know, it's a group of, you know, professionals, you know, in their various fields. It gives a lot of confidence that, you know, no one is looking to, you know, steal your money and run off. You know, we can give slightly longer than 15 months for payment plans. But, you know, it's on a case-by-case basis so that we're able to understand, you know, what we are talking about. If you're talking about 18 months, you know, it's more palatable because our business model is that, you know, we are using our cash and your cash to actually build, and we cut off a lot of things and we give you units at a fairly discounted market value, considering the quality, the size of the product, and even the income we are promising in that case. But thank you very much. I beg to leave, but thank you very much for any queries that you might have. I'm sure we do have Hannah and Javia who are able to sort of handle your questions. But thank you very much. Thank you.
Thank you, Mr. Anthony, for helping answer the questions. I think we have answered all the questions I can see on the chart, unless there's any question we have missed. I think someone asked whether this is our first project. We responded, it's not our first project. This is our second project, and we have 100% occupancy on the first project.
Javier,
Yes.
there is another question that I think you didn't answer. What happens should there be default on either party?
Yeah, so it was on my last slide. So I said if there's a default, so there are two kinds of default. The first default, if you default, let's say on your regular payments, say you're supposed to pay at the end of the month, and for one reason or the other you don't pay, so there's an interest charge on that. But I clarify that, you know, it's not an automatic interest. We are not like a bank where you suddenly see that, you know, you've been, you know, automatically charged. You know, there will be follow-ups, you know, before we get to that point, because this is a partnership. It's not supposed to be acrimonious. It's supposed to be a partnership. We are walking this journey together. Then in case of an outright breach, where you know, as a purchaser, you're not able to fulfill the contract, then there'll be a penalty of 10% of the purchase price. So in this case, you know 300,000. Then in case the breach is on the part of the vendor, then we will refund you your monies.
Are you open to joint venture projects with landowners?
Yes, we are open to joint venture projects. You know, it would, you know, if there's someone here who has a nice piece of land, please let's discuss.
Yeah. Is there any other question? You can just unmute yourself and ask the question. You don't have to type it in.
Okay, I just wanted to add to what Javier said. This is Hannah. So one of the things that we are trying to do as Reva is to try finish the project. We know we've promised our clients completion July 30th. So we are trying to finish the project even earlier, because when we finish the project earlier, what happens if the client has not finished paying, you'll start getting your rent after you finish your payments. So assuming we finish and hand over the project in July, and you've not finished your payments, probably you'll finish in October, you'll only start receiving your rent after you finish your payments. So us as Reva, because most of our members have taken the units, once we finish on time, we also make more profit. So this is an assurance for you that we are going to finish the project on time, and we're interested in walking this journey with our clients. So the earlier you finish paying,
there's a question that has come from Udoni. Udoni, I like that question. It's funny that a few weeks ago we took someone to go see the property, and he was, you know, she was more interested in being a shareholder than an investor. At the moment, there are no opportunities, but, you know, I think, you know, let's have a conversation on the side just in case something opens up, because you know, we have, you know, it's a limited company with, you know, a certain number of shareholders. So usually, you know, to get in a new shareholder, it means someone has to sell their shares, which currently, you know, there's no one who's doing so. But thank you for that interest in joining Reva. Also, I'd just like to encourage, I think it's one thing to go through this presentation online, or, you know, to go through what we've shared. But I think when you actually come on the ground and see the project, you know, with your own eyes, then it becomes more real, especially because you get to, you know, say you're driving from Westlands, you get to appreciate, you know, the distance, you get to appreciate the general environment. So I'd encourage, you know, those who are still not, you know, satisfied with what we presented, we are very much open to take you to site. Okay, someone has said, what if you don't complete by July? How do you compensate the buyers? So, so again, Jambi, we have explained that this is a partnership. You know, the only reason why we would not be able to complete in July is if, let's say, you know, some investors for some reason have not honored their investment. But as Anthony explained, as shareholders of Reva, we have stake in this project. We are very much interested in it completing by July, because one, we don't want to disappoint our investors. Our reputation will be at stake. So it's highly unlikely, fine, there may be what we call normal construction delays, which are beyond our control. And what we actually do, and maybe I didn't mention, we give our investors regular updates. So when you invest with Reva, every month, you will get a progress report of where we are. Every time you make a payment, you get an email, showing you that, this is how much you've paid, and this is the balance. So we, even if there was going to be a delay first, you would have been informed in advance. But in the unlikely event that we are not able to complete in July, it will not come as a shocker to the investors, because every month with the regular updates, would have known what the reason is, and at that point in time, we will have a conversation on whether do we do a time extension that is agreeable to the investors.
Any other question? I don't think there's any other question from the chat box or from the group. So Javier, you can just make your parting shot, and then I'll do the closing remarks.
Okay, thank you. Yeah, so for my final remarks would be, we were having a conversation with one of our, we'd call, someone we also look up to in this investment journey. And he said, if you had access to 20 million shillings right now, and you had the choice to put that 20 million shillings in a house, in an apartment in Kileleshwa, and you had a choice to put the 20 million shillings and buy 6 units or 7 units in the Aviv, what would be the most appropriate decision to make? Now, the reality is, if let's say you put that money, 20 million, in an apartment in Kileleshwa, your rental income is likely to be just about 100,000. Your mortgage repayments are about to be maybe 200,000. So you will still need to top up, 100K. Now, if you brought that money and put it in the Aviv, and you bought the seven units, then you're talking about 140,000. So already you have a 40,000, increase in terms of your income compared to your apartment in Kileleshwa. But also, secondly, what you have is, it's highly unlikely that, even let's say if we didn't go the rental share way that Anthony said we want to explore, someone who only has 1 unit in Kileleshwa, if you don't have a tenant, you are stuck. But it's unlikely that you're going to miss 7 tenants. You'll probably miss 1 tenant, and you'll have 6 occupancies. So I'd encourage us, if you're probably trying to make that kind of decision, my view, our encouragement would be, try and explore, spread your risk, spread your 20 million across, 7 1-bedroom units, as opposed to put it, in one house in Kileleshwa. I think, your cash flows will be more secure that way. Thank you, Asiko. Back to you.
Thank you so much, Javier. Thank you, Hannah, for making the time to make this presentation. Thank you, members of Investable, for also taking the time to join. I hope this, again, presents an investment opportunity for you. And so with that, I want to wish you a good evening. Thank you. Bye.
Thank you. I guess, Asiko, if anyone needs my number, you probably, I guess they'll reach out to you.
Yeah, you can, if anyone needs any of their numbers, I am happy to provide that. The recording will also be shared for those who are not able to make it for the meeting.
Okay, thank you.
Thank you.
Thank you all.
Thank you.
Thank you.
Thank you.